You have already got these details, guys, but I want to give them to you again. My email address, if you want to put this on the front of the notes, you can, is victoria.taylor@htftpartnership.co.uk. You have already got that, but that is there for you. You have actually also got my mobile number, which is on the email, but I will give it to you now. 07956 223 182 is my mobile number. Nothing is too much trouble, all right? If you've got any questions, any queries, I'm very good on email. Message, like text messaging and WhatsApp, I tend to read them and then forget them. So, we just need to be mindful of that, really, that if it's a quick one, then that's fine. If it's to say, Vicky, I'm running late, then that's fine. If it's, Vicky, can you do this? I do tend to forget when it's on text message. So just be mindful of that. But by all means, we are available outside work hours as well. So if you do have any queries, you're more than welcome to ask. So those are just my contact details. You do have them in electronic form already, but that's just there. And tend to put it on the front of your notes because you'll never lose it. Has everybody got that down if they want it down? Now then, what today's about is just really an overview. What is the purpose of your job role? Okay, why are you doing what you're doing? Or for some of you, you haven't actually started your job yet. So when you join your job next week, why are you doing that job function? Well, the reason you are doing the work you're doing is to provide information. Now, information, regardless of whether it's financial or not, enables you to make decisions. So, before I married James, I don't know if you are aware, James is my husband, I had a lot of information on James, and that enabled me to make a decision of whether I was going to say yes to marrying him or not. We've been married 7 years and been together for 10. So, it's a decision, it's been a long-term decision that I've made. But from an accounts perspective, you are going to be providing information. And this information isn't on whether James is marriage material, it's whether the performance of the business is good or bad. So financial performance is how well the business has done. And the bottom line of that is net profit. We call that net profit. If you've got a profit, you're doing well. But performance might be an increase in sales. You're making more sales. So it's not just about how much money you make. It could be actually how much you've grown as a business. The information that you guys will be helping to produce is also about the financial position of a business. What does that business have? I mean, I could do a financial position of you guys right now. So I'm going to pick on someone that I know. So I'm so sorry. I feel bad that I'm going to pick on you, but I'm going to do it. Megan, okay? Let's look at Megan's financial position, right? You can make it up, Megan. You don't have to give me any information whatsoever, all right? So I'm not asking for real information, but I'm just going to ask you some points. What's today's date? Where are we? We're on the 7th of September, aren't we? Megan, do you own a car? Okay, so as at today's date, this is the position. Let's pretend Megan is a business. We have got a car And that car will have a value attached to it. What type of car have you got, Megan? A Nissan Micra. Oh, I did my car lessons in a Nissan Micra. Loved it. So let's say that that car is worth today £4,000. Now, Megan, I'm going to ask a question. You don't have to answer it, all right? Don't have to answer it at all. Did you get a loan for this, or did you pay for it out of cash? Right, she paid cash. Now, if Megan had said to me that I'd got a loan out, I would then say to Megan, how much do you owe on that loan? Because that is going to reduce what we refer to as net assets. What is the net position of Megan's assets less liabilities? But we've got no loan. She doesn't owe a bank for that car. Megan, do you own a house? I wouldn't have thought so, okay? But if you did own a house, then that would increase your assets. But normally, when you own a house, what liability do you have against that house, guys? Does anybody know? If you own a house, yeah, you can have a mortgage. And a mortgage is just a posh loan for a house. So I'm listing Megan's financial position. I'd also say to Megan, what's your cash position, your bank position? Megan might have money in the bank, or if you haven't got money in your bank, what is it? What do we call it? Yeah, you've got an overdraft. You're overdrawn. Have any of you guys been overdrawn? I've been overdrawn. I've lost my personal bank card as well. So yesterday I got a notification that I was overdrawn. And I was thinking, well, I haven't used my bank card for like a year. That was a little bit scary in regards to bank fraud. So here, this could, let's say you've got 300 quid in your bank. You would add up all of your assets and you would take away your liabilities. Does that make sense, guys, in a general principle? So I could say that, Megan, you're worth as an asset position 4,300. That's how much you're worth today. Does that make sense, guys, in regards to position? In regards to how well you're doing, this could potentially be, and I'm just trying to make it relevant to what you guys are exposed to. If you've ever had a job, you're going to get your wages, aren't you? So let's say that is your income, whether it's weekly, monthly. Then you've got expenses. So I would have thought you guys pay for your mobile phone, petrol. So if you've got a car, you're going to have to pay for petrol, and that is really expensive, isn't it? And that comes out of your income. So ideally, you want a little bit of income left over. And we call that, in very basic terms, profits. And the more profit you've got, the better you are performing. So we've got two core principles, and this is where you've now got the introduction to terminology. A statement of financial position. That's what the Americans call it. I try and do an American accent. Statement of financial position. The English call it balance sheet. When you're in work, you may hear the reference to international terminology and UK terminology. So statement of financial position is your international term, and your balance sheet is your UK term. I mean, have any of you guys been exposed to this in your studies in regards to your A-levels? I know you level 3 guys and level 2 guys have been exposed to it. And maybe at work, has anybody talked about statement of position or balance sheet? So, yeah, Leah's going, yeah, that's on my radar. Yasmin's saying, yeah, it's on my radar. Okay, so for some of you, it is there. And This balance sheet, this statement of financial position, shows the position of a business at a point in time. And it is a summary of assets and liabilities. Assets is what you own. So you guys at home listening to this, is there anything that you can think of that you own and use on a day-to-day basis, apart from a car? A laptop, perfect. Absolutely, great example. Phone, yeah, great example. And if you use that for more than 12 months, that's going to be an asset. Brilliant. TV, absolutely. I've got a piano, so I play the piano. So I've got a piano, that's an asset. You know, one of my next door neighbours, he's really into playing the guitar, and I nearly fell off my seat when he told me that his guitar's costing like £10,000. James has got as he told you guys about his cycling, really loves his cycling. And I'm not lying to you, his bikes are so expensive, they're thousands of pounds. So those are assets. Clothes, your clothes are assets. Liabilities, have any of you guys got any liabilities? Have you got any obligations to pay anything back to anybody? I've got a mortgage, massive mortgage. Have any of you got, credit card, lovely Megan. That's going to be a liability. Your gym membership, your phone contract. That's interesting. So with your phone contract and your gym membership, does that come out as a direct debit each month, or do they? Okay. So that's not technically a liability at the end of the month because you've paid for it for that month. And sometimes, I mean, I don't go to the gym, but they ask you to pay 1 month in advance. Is that right? You know, I'm so out of date with gym membership, I have no idea. Yeah, so if you're paying up front, then you don't owe them anything because you've paid for it up front. With the phone, they take it out at the end of the month, but you're not having to owe them money. You might have a bank loan. Has any of you guys got student loans? Do they still do student loans? I feel like I'm getting old. I'm getting out of the loop here. So student loans or just a loan itself. Anybody got a hire purchase? So if you buy a car, I know Megan said she paid for hers out of cash, but sometimes you'll buy a car and then you will pay direct debits or standing orders every month for like 3 years, let's say. These are liabilities. An overdraft, I mentioned before, that's a liability. This is what you owe. You are owing somebody money, what you owe. The statement of profit or loss, or as the Americans would say, income statement, is a summary of the results of the business. And that is for a period of time. And that ends on the day that we look at the position of the business. If our income exceeds our expenditure, then we've made a profit. But if our expenses exceed our revenue, does anybody know what that's called? Revenue or income means the same thing. If you spend more, yeah, absolutely, Clarissa and Jess, it's a loss. So if you spend more than what you are earning, then you are making a loss. So that's not great. So if you're sitting here thinking, well, I don't really know why I do what I'm going to do, the reason you are doing the work is because your work will help produce these two core statements. And we will go through what these statements look like shortly. I just want to develop on this point a little bit more beforehand. Now, before I do so, are there any questions? This might not make sense to you today, but when you're going through the course, it might, this now starts to sink in. But I like to explain it now because it brings everything together. Let's take HTFT partnership as an example, okay? Because you guys might not know enough about the business yet to know the information. So we've got HTFT partnership. We have a year end, the 31st of March. That's our year end. So the last one we did was the 31st of March 2017. So that year end looks from the 1st of April 2016 to the 31st of March 2017. At these points, this is the position because 31st of March 2016 is my year end, and then my closing balance figures, so my closing position as at March will be my opening position the next day. So with Megan, today we ascertained her position. Tomorrow morning, that's going to be the same. There might be changes, and we'll look at that shortly. But as at the end of last year, we would have our closing balances, which will be our opening balances. So we're going to have our opening balances of what we own and what we owe. So you've got your assets is what we own, and then we've got our liabilities, which reduce the assets to give us a net asset position. So that is the position before this period. So before we even start this year, I know how much the business owns and how much the business owes. Then, throughout the period, so April, May, June, July, August, etc., we are going to make sales. And we are going to incur costs. But what we are hoping to do in that period is make a profit. We could make a loss, but we are hoping to make a profit. And then what we do is we then determine at the end of the year the closing balances. So we look at the end of the year and say, right, what are the assets as at the 31st of March 2017 now? What are my liabilities? Now, there should be a difference. There should be movement. They should not be the same. 12 months has gone by and our assets haven't changed. Our liabilities haven't changed. That means we've done nothing all year. So that to me is crazy. So we will also be taking into account the movement, which is our profit or loss. So the profit and loss is linked into the position of the business. And the reason for that is because the business has made profit. So if it's made profit, that needs to go somewhere. And where does it go? It goes into the balance sheet to say, look, this is the position. We've actually got some profit this year. And then we need to decide what we do with that profit. Is that all right, guys?